All right. Give me just a second. My microphone is trying to shift inputs on me here for some reason. Okay. Good morning, Michael. Good morning, Bob. Good morning, Perry. Good morning, Greg. Good to see you all. It's a warmer day, 38 degrees where I am. Hopefully, another sunny day. We're going to give it just a second. Got a couple people in the waiting room coming in, letting everybody's audio turn on as usual. And then we're going to get cracking. I sent a new Discord email with link and instructions, but I didn't get it out until last night. So if anyone was looking for it, it's there now. Futures are flat. That's true. All right, let's dive in. Let us dive in. Here's the disclaimers, as always. Oh, I forgot to tell you. Welcome to the weekly opening bell Market Watch Group. I am Scott. These are the disclaimers, one and the same. And here's our agenda. Opening futures, flat. There you go. Check. No, we'll take a look at the futures. Where were they overnight? Where are they now? What's the news? What are we looking for? What is the economic calendar telling us about this week? Pretty light until Thursday. So, we may see some drifting, a little bit of listlessness. We'll see. We'll review our market posture for anyone who wasn't there. Just a quick overview of it and where it puts us. Mindset for trades. You should already be looking at any trades you have open. You should already have a sense of where are they looking to open. You should be able to look at their pre-market bid-ask prices and have a sense of where it is that they're going to open, where that is relative to your current trade management plan. Meaning, are you near a stop? Are you near a target? Is there anything that requires your decision making today, or is it just going to be a regular day? That's what I'm trying to do here in this pre-market time. When I say what's my mindset for open trades, it doesn't mean, well, I hope they all go up. Right? It means what are we doing with them today? Are they in line? Every day that you have an expectation that isn't met, you're getting closer to a close signal. So that's what we should be thinking about with our mindset for open trades. We'll take a look at the opening range. We'll watch the first 20. We'll talk about what we think that means as far as possibility of putting on new trades today. We'll talk about managing existing trades, closing trades, etc. What the implications of that would be. We do have an early shopping list. It's not huge, but there's some okay things. The last discourse, yeah, I should have sent one last night. I mean, and it was like 10 p.m. for me. Midnight Eastern. Should have gone out. It told me I was successful in sending the email, I believe. Maybe I didn't finish it, actually. Nothing yet, huh? Where is it? Where is it? Huh. 12:27 a.m. Perry said yes. Okay. 12:27 a.m. Look around. It's there. It should be there. All right. What's happening? You can see the futures are flat, actually slightly positive, very slightly. 0.01 on the S&P, 0.01 on the Dow, 0.09 on the NASDAQ, 0.07 on crude oil. Russell down 0.17. No, oh, sorry. No, Bob. That I sent was an email for anyone not on Discord to have links and instructions to get on Discord. Not that sorry. I wasn't clear about that. Okay, what's happening? Inflation back in focus after AI frenzy. I mean, look, the frenzy is everyone's like, oh, are they really making that much money? And the answer is, yeah, sure are. Every business, and it's not huge, right? I have a subscription to Chat GPT. It's $30 a month. Companies are, small businesses are going to be able to pay 20, $30 a month to some AI provider or two that just, 20 to $30 a month adds up if you've got 100,000 subscribers, right? And that's not, I mean, so the big ones even more. So many. And some of them are free, right? Some of the like Microsoft Copilot. I think that some of those I've used that one a little bit. I feel like it's it's not as sophisticated in its like it can do some things for sure. It functions better than Google, right? Yeah, but there's AI solutions for students, AI solutions for personal life management, AI solutions for businesses of any kind, any business that has a website. Every business has a website, right? So if you think about it, it's a vast amount of potential in front of us, I think. So, okay, inflation though, still there. We'll get to the Fed here in a second. I don't see much here. I mean, we're looking at Buffett. Buffett says Berkshire built to last as it nears 1 trillion valuation. Wonderful news for Warren Buffett. I don't see anything. Yeah, I think that's it. Let's look at the calendar. Is there any news I'm missing that's if you're like, oh no, the market's looking at blah blah blah. Tell me what it is. This morning, nothing's out yet, but home sales, nothing expected there. Tuesday, durable goods. We do have a home price index, but it's supposed to actually be favorable. Consumer confidence supposed to tick up, but quite honestly, even if it dropped to like 113, it's still very much. Walmart splits coming up. We'll see that on our chart. That's true. 3-1, I believe, is what we have on that. Just haven't seen a lot of split activity. But well, maybe that kicks back into gear. Okay. Okay. GDP tomorrow. That could be one. It's a revision, but we'll see. Thursday's when we have our news. Spending, income, PCE numbers. There's some Fed speak. Friday, there's a little bit, but Thursday's really the only day I think that has much potential to be a catalyst. Quick peek at the Fed. Nothing expected for March. We know that. May, 4-1 against. June, first time, and it's about it's less than 1.5. Better than 1-1, but not by a lot. That's even in June. The first time there's a much greater probability is by mid-year. But I got to tell you, if someone had told me the market has adjusted from thinking, hey, we might get a rate cut in March, to it doesn't look like we're going to get a rate cut until June, maybe July. I would think, oh, the market probably, pricing that in. Whew. Now, if I showed you this chart and I said, show me where you think it looks like the market priced in moving expectations from March to June or July for the Fed, a much, 4 months less dovish. Show me where you think the market priced that in. I mean, you might be like, oh, did it happen back here? In September? No, that's not when, right? Like it was here at the beginning of the year a little bit, and you can see it just kind of went sideways. And even if you look at the IWM, right? Even if you look at the IWM, okay, the small caps, you can't even see it on the standard chart, right? You can't see it. But here, you're like, I see that, right? That's it. Even now, over the last month, it's actually kicked the expectations further, and yet the market, even the small caps, are showing this kind of resilience. To me, again, that's not something that like has a point value that we add into the, there's not like little supplementary bonus scores or anything, although that's a cool idea. Like we have an inverted yield curve. That's just a standard quarter point deduction, right? Something like that. Right. The UUP broke below its 50-day moving average. Speaking of, we haven't looked at that in a while, but the strength of the dollar, very correlated, right? Yeah. Oh, well, look at this. If you remember, let me take this back here. If you remember back here, in this period here, and this is a weird gap. I don't know what's going on there with that, but anyway, when we first kind of broke above that 50 and then it trended up like that, that's hard for the market. And if you look, that exactly correlates with when the market pulled back, was August, September, and over here, as it kind of topped out and did this first little gap down, higher low, when was that? 1st of November. And then from that point on, however, what's going on now? We're right back where we were, sitting at that 50. Yeah, let's watch that, because if this breaks above the 50-day and then starts to show some kind of trend, come to think of it, I might create some kind of like bonus, if this, then, I don't know, but we do need to keep an eye on this, I think. Let's go look at how the market opened real quickly. Flat. It opened flat. We're down. We're up a little bit from yesterday's close. We're below Friday's high by quite a bit. I mean, I think we could meander a little higher up in this trend still. You can see the stochastic still looks like it's got maybe some oomph potentially left in it. We'll see. Quick peek at the posture. If anybody missed it, what happened? We increased our long-term score. We had a little bit of a breakout of our long-term trend that we said, let's knock it up a point, a quarter of a point. And you can see that was pretty good. We got there after a month at 1.25. We raised up again. I'm comfortable with that. We weren't too aggressive, I don't feel, in that. Short term stayed the same. Volume dropped. And we said we thought it would probably drop because it's just some of our old positive volume days dropped off our 1 month chart. They're no longer relevant. Major markets stayed the same, but there was talks of potentially raising it to a 1 due to what we just looked at in the resilience and strength shown by the S&P, and the S&P attempting to move into a leadership position. We were on the fence, so much so that we went to the 22-day as a tiebreaker. 22-day said, ooh, a little bit of concern still. So we said, all right, let's hold off. The system worked. The system worked, got us to a good score. Sector rotation stayed strong, looks great. Everybody's, in on the action. In fact, what was interesting was the weakest in the last month was technology. Technology's gone a little sideways and pulled back during some of the earnings volatility. Industrials and financials look fantastic. Healthcare looks strong. I mean, there's a lot of good going on, even if there's a little bit of a hesitation that we've seen, which seems to be breaking out to the other side. Lastly, the VIX. I gave it a half a point, and yes, I acknowledged that I have another one of these half point drop, half point rises. When I looked at the VIX and its choppiness and its volatility, I thought to myself, you know what? That's reasonable. I did what I was supposed to do. The VIX is a little choppier right now than it has been. So if something's a little bit more volatile than I would expect, where I would normally give it quarter point ups and downs, that extra volatility kicked it to half a point up and downs. And that's a reasonable conclusion to reach. So at the end of it, where am I? 675. You'll notice we actually seem to be just kind of hovering around in this, and that's to be expected. We don't just expect our market posture to just keep getting better and better. It gets to a point, and then it just kind of wanders in there. It could drop sometimes where it's like, oh, but as long as we don't see anything, right, like a point and a half or two 1-pointers in a row or what, we're going to be looking at this thinking, okay, you can see even here in January, here we dropped 1.25 points over 2 weeks, maybe even more if you go back. No. All right, so it gets up and then it pulls back a little, then it gets up, pulls back. We don't expect this not to have that. We respond every week. So expect that this could fluctuate around, but as long as we're like north of 5.5, these are ideal conditions. These are the kinds of conditions we're looking for. Hopefully they stay for as long as possible, but we constantly watch for signals that they're not. That's our hope for the best, prepare for the worst mentality, right? Okay. 5 minutes. We don't need to look at the opening range just yet. Did we get through everything here? I believe we did. Okay. We may actually have time to run a search at the end. Let's get to the watch list and just kind of see, as things have opened, how everything looks. Okay, so Apple. Well, let me get my chart back down to a 6-month daily. Apple, I didn't love it. It turned, and then it gave this bearish engulfing candle that left us down here, and you can see a little bit of fall. I mean, it hasn't broken this support level, but it definitely gave like a false start. I'll watch and see. Maybe a second signal tries to show up, but we're not trying to force anything here. We want Apple. Part of technology's struggle over the last month is absolutely contributed to by Apple. Look what Apple's done in the last month. This is the last month of Apple. We were here, and now we're down here, kind of struggling a little bit. Yeah, we're rooting for Apple. AIG, if you're in it, you're still in it. Right? Still in it. It's not a new signal now. It's way too far. That's too much. In fact, as you look at where this thing could go, if you were to draw some lines across the tops of these, you're thinking to yourself, maybe appear around 73 in the next little bit. Not a ton more. Okay. AMD. So we talked a little bit about this and how the alerts are going to work. That when we have an alert system or an alert signal come, it's going to say this is a range that we're trying to buy into, because if we can buy in somewhere in this range, let's say it's just right in the middle here, and then that triggers our stop loss, because if I'm going to do it automatically, I'm going to trigger that stop loss automatically. That's sustainable right there. That's risk I could handle and try to produce 2 or 3 to 1 with a target up there, right? But if I'm not getting into here, now my risk would look like this, because it's going to trigger the same stop. Now with the same target, you can see I'm not even getting 1 to 1, right? So using an automated order entry type of a system, it would never work that way. That's why there's going to be a range where it's basically like, if it opens above that range, if it gaps through, which is what happened here, if it gaps through, that's it. Pass. Right? I don't want that. It can't, not that I don't like it because I think it's wrong. I don't like it because it can't produce the required reward to risk ratio at that point, right? That's why. So anyways, that's an important distinction with where our trades have to be put on in order for that entry combined with where our stop loss range is to provide us. I mean, what we should be hoping for is that we're getting at least or around 1.5 to 1 on our first target, where we tend to take a little piece off and relieve a little pressure, lock some gains. And we're hopefully getting 2.5 or 3 to 1 on the primary target. And you know, it's hard sometimes to get those. If you're entering too late, you're not going to be able to produce that. Okay, let's keep going. Amazon, same kind of a thing. You see a lot of these. AXP, though, no. AXP gave a nice signal here. And we even said yesterday it's viable. And if you liked it, could have entered this morning. It's still, you know, basically in a viable situation now. If you look at the Heiken Ashi candles, it's a little bit, but I could put a stop loss right here beneath yesterday's Heiken Ashi low, right? That would have me putting a stop loss around 212 and change. Let's say 212.25. That's $3 of risk. Can I still get 6 from this? That puts me at a target up here around 220, 221. Would I say that's feasible? Yeah, I'd say you get 2 to 1 out of this trade. What else would I like? The fact that if I'm already in this momentum stage, I'm going to tighten not today, because today there's a little bit of a pause in this candle. You can see it looks a little bit like this here, where it's like you have a pretty good size and then it pauses. This is a transition candle, not a reversal. Transition, which means it can transition back to momentum, or it could transition to a red, like back here, transitions to the red. Well, if it transitions to red, we want out. That's why we have a stop loss underneath here. If it transitions red, trade's over. You're out. You take your $3 of loss. But if it transitions back to to these here, we might get another run that goes from 201 to 213. That's $12. We only need 6. So could I say, hey, you know what? I'm going to try for 6, maybe even 9. Maybe I'll try for 3 to 1 on this trade. There you go, right? So, okay. Let's get back to the list. Boeing, there's nothing here. There's nothing here, even though it's at a support level. And it does seem to be at a support, right? How many touches do we have? It's at support, but the buyers have done nothing to convince you that they're going to come in now. What I want to see is the standard. There's my line of consolidation right now. Cross that. My expectation is it's going to come up here. You'll notice that this 50 is just drifting on down, probably around the same place. It's going to hit that and bounce back down. If it can bust through that, then I'd be like, oh, okay. Now we're talking. Now we've broken some old highs. Buyers broke it out. New high, pull back, higher low. If I don't see that pattern right there, I just don't care. Let's watch it, and it's interesting to see. Do we expect that all the bolts are tightened on all the planes and they can get back to business? I don't know. I don't know. BLDR. Let's keep going. BLDR. I think BLDR looks pretty bullish. Strong stock. We've traded it before. It is in industrials. We just came out of earnings. Okay. Actually, it was good earnings. If you look at the earnings report, they expected 269, got 355. You can see though, we're kind of drifting a little bit on your stochastics. A little bit of this coming down. So my thought is, if it does this, great. If it starts to turn from right here and bounce, you've got to decide if you think that was it. I think I have to kind of lean more towards, I'm looking for 2 or 3 days pulling back. So if it does just shoot from here, I'm spectator. BX looks close. The trend is still fine. We didn't quite make the target on the last bullish move, but we're still on a higher low pursuit. We're still above the 50-day. It's still a bullish stock in a nice bullish industry or sector, financials. Citi, I told you that I'm going to give it just like to here tomorrow going sideways. I'm not going to let it break down. But remember the pattern that I believe that I have seen here, and that is its tendency to drift a little bit, right? You can see it started its move and it drifted a little bit and then reaccelerated. And then the same thing happened here. Started its move, drifted a little bit, and then accelerated again. So what am I looking for? Started its move, drifting a little bit, and then accelerating to the upside. So we'll see. It's got another day, maybe 2. But this was one held. Okay. Caterpillar gave a signal here. A couple people took it. Looks like it's still pursuing bullish momentum. So I know that there's several people in a number of different trades. It seems like anything I remember telling me that they're in looks okay coming out of the weekend. That's one of the things every Monday. That's one of the things we're doing. All right. How did everybody survive the weekend? Capital One, cat up a little bit. Capital One still looks like it's kind of holding and possibly, right? I think you could viably consider a trade there. ConocoPhillips, no. Costco, still going. CrowdStrike. So again, CrowdStrike's a tough one because I think CrowdStrike, after its gap down being pulled by Palo Alto's earnings, it's got to have a higher low. And right now you can see it kind of reversed and then it's stalling. So this is a lower high. It has to hold on the next pullback, but even if it does that, earnings, I don't know. I wanted to trade this again, but I just don't think there's anything viable. CSX, remember this high, this is actually bad data feed. That didn't happen. Just it's the regular candle. But today looks great. So ongoing upward momentum. Perfect. Reason to hold, still working. Delta, I think the airlines maybe have convinced me that I would try it again. Little bit of a cup and handle pattern that has formed here. There's the cup. Now, what would I be looking for? I'd be looking for this to pull back and maybe find a higher low sitting on top of its 50. If I saw that cup and handle pattern form, I would say, yeah, I'll give it a shot. I will definitely give that a shot. Home builders, DHI, not yet. Still just kind of flat and sideways. Here's the Dow. Dow looks fine today, up 0.25%. Here's Ford. Oh, Ford. We're not doing the alerts until the SMS text is ready, and that's not. I hope it's soon. But if you're thinking about this one, this is viable. Maybe we'll come back and kind of explore this here because you can see it hasn't crossed. If it was a alert trade, we'd probably have a entry above these, and you could wait for that around 1224, 1225. But your stochastic seems to be turning, and I'm saying I don't say now. I mean we're 17 minutes into the day. This by the end of the day could be a red candle back down here, and then you're like, oh, that's not viable. So we can be patient with this and let it you know percolate today. But this looks viable, and you can see this thing can move. I'd probably put my target up at 13 and a half. That's a buck 30. You might think only $1.30. It's $1.30 on a $12 stock. Right. Buck 30. Where would my stop loss be? I don't think I have to take more than 25 cents. 11.95, something like that. 25 to the downside, buck 30 to the upside. I'm getting almost 5-1 on that trade. I would definitely ease some pressure right here around, and I wouldn't say 13. I'd probably go actually 12.95. Remember, 13, those round numbers can sometimes get sticky. So I'm thinking, hey, if I'm doing it, I'm going to get it where it's right underneath it. So 12.95, I'm still getting 3-1. 3-1 at 12.95. Yeah, I like this. We'll come back to this and explore it a little bit. That has some funky options that somebody noticed yesterday. Okay, let's keep going. GB Fastenal. Yeah, if you're in it, you're like, okay, it's looking good, but it's starting to slow down. The signal was back here. This was the signal to get in this one. As it started to bounce off of this higher low, and it went sideways, and accelerated, and now you're thinking, okay, well, how high can this thing get? Bitcoin is in a bit of a consolidation, and if it pops out, this thing can move fast. There is definitely potential there. GE, I don't know what the story is with GE, but it's absolutely astounding. It continues to go. Gold kind of sideways. Google, yeah, see, that's a tough one right there. What's happening here with Google? We don't love to see that. Google's one of our top two communication services, and that's pulled back. So a little bit of concern there. Home Depot continues to just tell me I should have jumped in when I continue not to. IBM, nothing. Intel, nothing. Although not necessarily nothing. I mean, it's so weird and choppy through here, but it technically is at a higher low than this last one. I don't know. Hasn't broken the 50 really, though. I don't know. Maybe I'd wait for it to break the 50 to really be convinced. IWM, small caps, look at them, up over 0.5% now. They're pushing. JP Morgan, strong but overbought. I would love to trade JP Morgan coming out of its next consolidation. All we got to do is wait 2-3 days, 4 days. I mean, who knows? But there's a trade developing out here for us. Meta, same thing. Meta had one of those gappings, right? We were looking for Meta coming out of this little consolidation, but it gapped and it just kind of gapped through. So now what? Wait and see for the next pullback. Microsoft. Okay, so Microsoft is, it's down 0.2, but it's holding up. Same kind of a thing. We were looking for a trade on it, and it just gapped. Once it gaps like that, we're not going to chase it. We're not going to just going to shrug our shoulders and wait for the next opportunity. I'm glad it's not down 2.5% like Google, because we're always rooting for things like Apple and Google and Meta and Microsoft. Netflix. A lot of these big ones are just kind of chopping a little bit. You just got to be patient, let things develop, and trade auxiliaries, trade around it. NVIDIA, Waiting for the next consolidation on that freight train to see if it's going to give a opportunity to jump on for a ride. Picard, so you can see a lot of these are a bit overextended or still going. I believe Sandy was in this one. Maybe she was fitting fast enough, but you know, these are ones that we've been watching and have been just continuing to put out trades. Industrials, QQQ holding its ground. Ross Stores. This was a new one and gave a signal right back here as that stochastics turned, and you can see this is day 4, continuing to push higher. Still time before earnings. I still think that maybe it could get up here into maybe 150, 151. Squeeze a little more profit out of it. SMCI. Ooh, it's choppy. Be careful. Be careful there. SPY, let's look at our opening range. We're holding positive by not by much. Okay, so this is kind of this is the 4th candle in establishing the range, the last one, and you can see it sold off and then whipped back up. So we have kind of a large opening range, but you'll notice that the bottom of our opening range is actually at a very well-established support level that seems to be carrying over from the intraday chart on Friday. Support here, it touched it, it touched it, it touched it. And we touched about the same resistance level. We flirted a little above it. So for me, I would say, yeah, 507.75 to 509. That's, if we just stay inside of that range, it's just kind of the market going sideways, which for late February, early March is not unexpected when you look at the cyclical history of the market. Not unexpected at all to see it go a little sideways. We said that. We could see sideways for the next couple of weeks. We're still going to look for bullish opportunities, but if we have a failure to launch or two, it's not going to shock us. But yeah, let's watch this today. See if it breaks. If it breaks 508.75, I still think it could struggle at 509, but we'll see. TPR overextended. Gotta wait for an opportunity. UNP, if you carried this one, it's starting to slow down. You're going to be tightening your stop in this situation, trying to make sure you have as much, keep as much of your gains as you can, and still see if it has any momentum left. You can see this one though has a little bit of a reversal on the stochastics. It's starting to get a little nervous out here away from home. Today's VIX is, remember, we got down to new low here. It's just kind of holding up. With what we said about the market going sideways, I absolutely know we could see this thing pop a little bit and then meander and come down. Fine. That's still de-escalation. High, lower high. That would still be a lower high. And the thought process would be that we're trying to work our way back down into the 12s. Yeah, look where we are. Late March, April, very bullish months. Cyclically, absolutely, that makes sense to me from a historical fashion. Waste management overextended, nothing for us. Walmart waiting. Here's the split coming up. It's today. Oh, we're post. Yeah. Sorry, it's split. And now we're I'm blanking on my phraseologies. Post split. Ex-dividend. There we go. Sorry, I'm like, what the hell's the term? Oh, I probably would fail the Series 7 now. Ex-dividend, meaning it is now, we were about $180 on Friday, and now it's at its split adjusted price of 58. They're hoping that people who just look every now and again are like, 58, that's so cheap. Let's buy Walmart. You're buying 1/3 of what you did. But yeah, I think we got to wait a little bit and see if this thing pulls back towards the 50-day moving average. Let's take a quick look at the sectors and a few groups. You can see biotech is back in favor. That's helping healthcare, and materials just had that spike. I don't know what caused that. We don't. I mean, it's not like outrageously high. You can see we went from 83 to 87. 87. It's $4. That's 6% maybe. Um, Maybe even 5. So it's not like a huge, but it definitely showed some momentum. Communication services has flattened a little bit, but trend still looks great. It's well above its 50. Energy, it popped, but it's not really surging, which is good. Financials looks fantastic still. Industrials looks fantastic. Those are two of my favorites right now. Right now, you can see that technology, communication services, which typically are our favorites, are slowed down a little bit, which is why it's good that we have 4 other groups that we're thinking about. And these 2 are my favorites, industrials and financials. You can see there's that technology, a little bit more sideways. Staples looks fine. I'm trading Costco, willing to trade Walmart. Utilities, nothing, which is good because we have to have something that might show like, oh, look at that surge. We think that's defensive, right? Okay. Here is healthcare. Looks great, but overextended. Here is consumer discretionary. Real quickly, remember. Oh, Ford. Let's go back to that. Yeah, I'm going to take a couple extra minutes. I'm going to go a couple extra minutes. I don't need you. Let me. Let's bring this over. And let's just play with this for a second. If I could, why can't I carry this over? Okay, let's get Ford. Oh yeah, look at that. Actually, now it is. Now you can see it is crossing 1223, 1224. It's hitting that 1225 mark. So let's say that we would go with the stop at 1195, 1225. How far out am I going to go? I'll tell you what, I feel like I could go just like a short-term option. Um, and I could go, this is actually a little bit in the money. I need my slices. We said we're going to have a stop at 1195, a little bit underneath. And we said we're thinking it could get all the way up to, did we say 1350? 1350? Let's even just say 1335. 1335. Volatility is not low. It's not high. I'd live with it. 1335. So there you can see. Now let's give this until Friday. That's it, until Friday. If I give it till Friday, I'm taking about $25 of risk. This is 10 contracts. So if I take this down to 1 contract, I have about $25 of risk, and I have about $100 in gain per contract. So that's about a 4-to-1 right there. Why 1182? Yeah. So if you notice, there was some kind of a corporate event, and I'm not sure what would have done it. All of the options have been adjusted with one exception, the April 5s. These are the newest weeklies that got released, and you can see they're normal, 11 and a half, 12, 12 and a half, 13. These used to be dollar increments, but I would say maybe due to some kind of maybe like a dividend or something, all of the strike prices have been adjusted by that 18 cents, right? So you can see any of them around, they have those funky strike prices, but they're still standard options. So stock at 12.23. So 11.82 as a strike price is in the money by about 50 cents. Now we're dealing with a $12 stock, right? So if this was a $120 stock, that's like being $5 in the money. So it's just the first in the money option. In this case, I'm either in the money or I'm out of the money. There's no, it's right. And you're out of the money by 50 cents. Now you could, and you can maybe even make that look good. If you ever bought an option for 12 cents, that's what I would call an all or nothing. It's all or nothing, because there's no way you're ever going to manage risk on that. So you could say, hey, I'm going to buy 20 contracts at 12 cents a piece, and if it gets to 13.35, you're gonna make 4 times your money on that trade, right? Because it's gonna have 50 cents of intrinsic value at that point. So what you paid 12 for is worth 50. Great. But I think that I would rather have the ability to manage risk. I mean, it's still only a 60-cent option, right? So there you go. That's the kind of thing I would look to do with that. If it's wrong by Friday, I'm out. If it's right, I'll carry it. Right? If it's right, I'll carry it through the weekend. It might take 2 weeks to go right, but only 1 week to go wrong, and it's Monday. So there you go. That's what that would look like. And it does look like it's trying to move. And it's, the first half an hour, if you did an alert, that would have triggered, just so you know. This week, we are starting over on section 1 of your trading plan. If you don't have your trading plan, don't forget that you need to come and visit the welcome doc. Any email that comes your way has this. I think the emails that you're sent when you first sign up has this, but if not, I'll send an email with a recap from today. In that email, you'll see the welcome doc link. You come in here and there's your trade plan outline. You download it, you start working on it. You have the watch list, you have any document regarding what we're doing here, any link regarding what we're doing here. All your resources are here on the welcome doc. You can download logs, you can download blank market posture spreadsheets, whatever you need. But we are working on personal info, strengths and weaknesses, commitment, discipline, mission statement, vision statement. This is you really understanding yourself as a trader. This is you committing to trading as a business so that it's not a hobby. It's one or the other. It's either a hobby or a business. There's no in between. The routines, the activities, the depth that we go is what's going to make it that way. And hobby traders tend to be gamblers, meaning they have negative expectancies, whereas business traders are profitable, meaning we have positive expectancies. Okay. Questions, comments, or concerns? This is this week. You need to give me 1 hour. That's all I ask. 1 hour specifically dedicated. I said this 2 months ago when we the first of the year. I said, the first 2 months is going to fly. Just give me an hour a week. And at the end of that, you're going to have a great new version of your trading plan, whether it's your first, second, third, doesn't matter. Okay, that window starts again 2 months from now. At the end of March, I'm going to be like, all right, you should have a great new pass at your trading plan. It should be stronger, deeper. You should be adhering to it better. Don't miss it. 1 hour a week. That's all I ask. Focusing on section 1. Remember that the videos that correspond to that will be in today's email as well. If you haven't signed up for Discord, look in your emails around 12:30 a.m. I know that sounds terrible. 12:30 a.m. last night, Eastern time. It was around 10 mine, and I'm like, oh shit, I forgot to send that out. So I sat down and sent it. So then I didn't forget. But it came in around 12:30 Eastern time in the morning. Look for the Discord link and instructions, and you can click on that, sign up, jump in. Alerts will come that way. They'll also come via text, but we get some great discussions. People have some great discussions. We talk about trade ideas, etc. And the more participation we get, the better that resource will be. So come on in and contribute. It's good to see everybody. Remember, tomorrow night, 8:30 p.m., is one of the last two trading foundations courses before we switch gears into options on our Tuesday, Thursday nights. The options foundations will start next week, but we have, we're going to do some post. We're going to do a look at somebody's first 100 trades and how you would analyze the numbers and what could you do with that. So that should be a lot of fun. I hope you'll join me for that. Enjoy the rest of your day. It's good to see you. And as always, happy trading.